January 24, 2023. A small short-selling firm called Hindenburg Research uploads a single report to the internet. Within hours, one of the largest business empires in Asia begins to crack. Adani Group stocks start falling. Billions in market value start disappearing. Gautam Adani, one of the richest men on the planet, watches his net worth drop by over $50 billion in less than a week, according to Forbes. One report turned India's most powerful billionaire into the center of a global financial war. By the end of this video, you'll know exactly how this empire was built, what the allegations were, how the market reacted, and what every investor should learn from the wreckage. To understand why this scandal hit so hard, you need to understand what Adani Group actually is. Gautam Adani founded the company in 1988 in Ahmedabad, India. He started in commodity trading, but over the next 3 decades, he built something much bigger. Adani Group became a multinational conglomerate with operations in energy, logistics, ports, airports, coal, agribusiness, real estate, financial services, defense, and green energy. By August 2021, the group surpassed $100 billion in market capitalization, making it one of the most valuable companies in India. At its peak in September 2021, Bloomberg reported that Adani Group's market cap reached approximately $250 billion. Adani did not build a tech app. He built the physical infrastructure that India runs on: ports that move cargo, airports that move people, power plants that keep the lights on, solar farms meant to power the future. The bigger the empire got, the harder it became to question. And that is exactly where the danger started. Hindenburg Research is a financial analysis firm known for short-selling and investigative reports. On January 24, 2023, they published a report accusing Adani Group of stock manipulation, accounting fraud, use of offshore shell companies, and undisclosed related party dealings. The report claimed the empire was dangerously over-leveraged and overvalued. By the end of 2022, Adani Group's total debt stood at approximately $30 billion, according to the Economic Times. Hindenburg said the gap between the real value of the companies and their stock prices was massive. Adani Group fired back. They called the report, and this is a direct quote, a malicious combination of selective misinformation and stale, baseless, and unsubstantiated allegations. They released a rebuttal running hundreds of pages. But here is the part most people miss. Hindenburg held a short position. That means if Adani stocks fell, Hindenburg would profit. That single fact created 2 entirely different stories. Was Hindenburg exposing fraud or manufacturing panic for profit? This was not just company versus researcher. It was billionaire versus short seller. And the market had to pick a side. One of the most complex parts of the Hindenburg report focused on offshore entities. The allegation was that certain funds and shell companies based in places like Mauritius were not truly independent investors. If outside shareholders are secretly connected to insiders, stock prices can look more natural than they really are. The public float, meaning the shares available for regular investors to trade, might appear healthy while the real control stays hidden. Think of it like a mirror reflecting another mirror. Everything looks like it stretches forever, but the actual room is small. This was alleged, not proven. Adani denied these claims, but the complexity of the offshore structures made it nearly impossible for regular investors to verify what was real, and that uncertainty alone was enough to do damage. The chart can look real while the ownership behind it is anything but simple. After the report dropped, the market did not wait for courts or regulators. Shares of Adani Group companies, including Adani Enterprises, fell by more than 75% in a matter of days, according to CNN Business. The group's market capitalization dropped from roughly $250 billion to around $100 billion, according to Bloomberg. That is over $100 billion in market value erased. Adani Enterprises had a share sale underway at the time. It became impossible to continue under those conditions. The offering was pulled. Questions about debt grew louder. Banks with exposure to Adani started getting questions from their own investors. Regulators started paying attention. Courts take years. Markets punish in minutes. Adani did not disappear. The group released a massive rebuttal document, pushing back against every major claim in the Hindenburg report. Adani framed the attack not just as an assault on his company, but as an attack on India itself. The statement from Adani Group read, "We have never had any intention of misleading our investors, and we stand by our commitment to transparency. Some investors accepted this. Some stocks began to recover. The infrastructure kept running. Ports still moved cargo. Airports still operated. Power plants still generated electricity. The empire was bleeding, but it was still standing. Then came the second shock. In November 2024, US prosecutors charged Gautam Adani, Sagar Adani, and others over an alleged bribery and fraud scheme. The allegations were tied to solar energy contracts in India and claims that investors were misled during fundraising. The reported figure attached to the alleged bribery scheme was $265 million. Adani denied wrongdoing, but this was different from the Hindenburg report. Hindenburg was a private short seller. This was the US government. Hindenburg was market war. The US case was legal war. Here is the part that stings. Adani Group had been positioning itself as a leader in India's green energy future. Solar power was supposed to represent clean growth, a new chapter. The group invested heavily in renewable energy, trying to become a key player in India's energy transition. But the US allegations claimed those very solar contracts were connected to bribery. Clean energy with dirty questions hanging over it. The future was being sold as clean, but the allegations were anything but. What made this scandal so dangerous was not just one company's stock price. Adani Group was a web of public companies, $30 billion in debt. Bank relationships, government contracts, and investor trust all woven together. Before the scandal, Gautam Adani was seen as a major backer of Narendra Modi's government, raising questions about political connections influencing business practices. Fast growth plus heavy borrowing plus political access creates a structure where if trust breaks at any point, everything connected starts shaking. Banks question their exposure. Investors question their holdings. Governments question their contracts. A conglomerate does not collapse like a building. It shakes like a web. Now here is where the story gets complicated. In May 2023, SEBI, the Securities and Exchange Board of India, launched an investigation into the allegations raised by Hindenburg. By September 2025, SEBI reportedly dismissed key Hindenburg-related manipulation and disclosure allegations. Reports indicated SEBI found no related party transaction violations or market manipulation in those specific orders. Adani welcomed the outcome. Most people assumed the Hindenburg report would end with a regulatory punishment. It did not. That challenges the popular narrative. But here is the thing. The market damage already happened. The trust crisis already occurred. Over $100 billion in value had already vanished. Even when regulators clear a company, the market remembers the fear. Adani Group did not disappear. The ports still move cargo. The airports still operate. The power plants still run. The empire survived. But the scandal exposed how fragile trust becomes when a company grows too fast, borrows too much, and becomes too tied to political power. Real assets do not automatically erase governance concerns, and allegations do not automatically equal guilt. The real story here is about trust, power, and market belief. The fall did not destroy Adani. It changed the way the world looked at him. The Adani case is a warning for every investor. Do not fall in love with a national growth story without checking the balance sheet. Do not ignore $30 billion in debt because the founder is famous. Do not assume political access means low risk. Look at the debt. Look at the cash flow. Look at the governance. Look at ownership structure. Look at political risk. Look at the valuation. If a company becomes too powerful to question, that is exactly when questions matter most. The Adani scandal was not just about one billionaire. It was about what happens when money, politics, national pride, debt, and market hype all stack on top of each other. And the lesson is simple. When a company becomes too powerful to question, that is exactly when you should start asking questions. Makash signing off.